Want to invest in the stock market but don't know where to start? I get it, I was in your shoes once. Picking your first stock can seem super intimidating. I mean, we're talking about real money here, right? But honestly, it doesn't have to be this big scary thing. In this video, I'm going to walk you through the entire process of picking your very first stock step by step. We'll break down all the confusing stuff so you can start investing with confidence. And trust me, once you buy that first stock, you'll be like, why didn't I do this sooner? So whether you've got $100 or $1,000 to invest, this video is for you. Stick around until the end, because I'm going to share a simple strategy that even Wall Street pros use to pick winning stocks. Hit like and subscribe for more beginner-friendly investing videos. Before we jump into the exciting world of picking stocks, let's take a step back and understand what the stock market actually is. Think of it like a giant online marketplace where you can buy and sell pieces of companies. Those pieces are called stocks. When you buy a stock, you're essentially buying a tiny slice of ownership in that company. Now, why would you want to own a piece of a company? Well, when the company does well, its value increases, and so does the value of your stock. It's like buying a house that goes up in value over time, and the cool part is, you get to participate in the company's success. But just like a house, a stock's value can also go down. That's why it's crucial to pick companies that you believe in, companies that have solid track records and are poised for future growth. We're going to dive deep into how to do exactly that in just a bit. Think of companies like Apple, Tesla, or even your favorite sneaker brand. When their products are flying off the shelves and their profits are soaring, their stock prices tend to reflect that success. On the flip side, if a company isn't performing well, its stock price might take a hit. Now, you might be thinking, this all sounds complicated. But trust me, it's much simpler than it seems. The key is to start with the basics, take it one step at a time, and remember, you don't need to be a financial expert to invest in the stock market. You just need the right knowledge and the confidence to get started. And that's exactly what I'm here to help you with. By the end of this video, you'll have the tools and understanding you need to confidently navigate the stock market and start building your investment portfolio. So buckle up, grab your favorite drink, and let's get you started on your journey to becoming a savvy investor. Okay, so you're ready to dive into the stock market, but where do you even begin? Let's talk about how to choose your first stock. Now, you don't need to go chasing after some obscure company nobody's heard of. In fact, for your first stock, it's best to stick with what you know. Think about the products and services you use every day. Those are great places to start. Do you love a particular coffee shop? Maybe a clothing brand you can't get enough of? Or how about that tech giant everyone relies on? Those are all companies you can invest in. When I first started, I invested in companies like Starbucks and Chipotle because I knew and understood their businesses. Plus, I was a happy customer, so I had a good feeling about their potential. But it's not just about picking a company you like. It's about looking for companies with a proven track record of success. Look for companies that have been around for a while, have a strong brand, and consistently generate profits. This shows they have a solid foundation and are more likely to weather economic storms. Think of it like choosing a reliable friend. You want someone who's been there before, knows what they're doing, and has a history of making responsible choices. The same goes for your stocks. Another important factor to consider is the company's financials. Don't worry, you don't need to be a financial analyst to understand this part. Simply look for companies with steady revenue growth and healthy profit margins. These are indicators of a company that's managed well and positioned for future success. Remember, investing in the stock market is a marathon, not a sprint. You're in it for the long haul. So choose companies that you believe in, companies that have the potential to grow alongside you for years to come. Alright, so we've talked about choosing companies you understand and looking for a solid track record. Now, let's dive into the exciting part, actually researching stocks. Don't worry, this isn't as complicated as it sounds. Think of it like online shopping, but instead of buying clothes or gadgets, you're researching companies to invest in. The good news is, You don't need any fancy tools or subscriptions. Websites like Yahoo Finance or Google Finance are your best friends here. They're free, easy to use, and packed with valuable information. Simply type in the name of the company or its stock symbol. That's the unique code that represents the company on the stock exchange. Once you've found the company's page, you'll be greeted with a wealth of information like the current stock price, its trading history, and even news articles related to the company. One of the first things you'll want to check out is the company overview. This section gives you a quick snapshot of what the company does, its industry, its management team, and even its competitors. It's like reading the back of the book before you decide if you want to commit to the whole thing. Next up, the stock chart. This visual representation of the stock's price history is like a heartbeat monitor for the company. You can see how the stock has performed over different time periods, daily, weekly, monthly, even yearly. This helps you understand the stock's volatility, meaning how much its price fluctuates. Now it's time to dive into the news and earnings. This section keeps you updated on any recent developments, announcements, or financial reports released by the company. It's like getting insider information to help you make informed decisions. And finally, let's talk about the key financial numbers. Don't let this section intimidate you. It's easier to understand than you think. Focus on metrics like revenue, earnings per share, and price-to-earnings ratio. These numbers tell you how profitable the company is, how much money it's making per share of stock, and how expensive the stock is relative to its earnings. Remember, knowledge is power when it comes to investing. The more you understand about a company, its industry, and its financials, the better equipped you'll be to make smart investment decisions. Alright, now that you're armed with the knowledge to research and choose your first stock, let's talk about some common mistakes beginners make, and how you can avoid them. First up, the dreaded FOMO fear of missing out. It's easy to get caught up in the hype when everyone's talking about a particular stock and its price is skyrocketing. But remember, chasing after hot stocks can be risky, especially if you haven't done your research. Stick to your investment strategy, and don't let emotions dictate your decisions. Next, trying to time the market. Many investors, even seasoned ones, try to predict the perfect time to buy low and sell high. But here's the thing. It's nearly impossible to consistently time the market correctly. Instead of trying to outsmart the market, focus on buying solid companies for the long term and let the power of compounding work its magic. Another common mistake is putting all your eggs in one basket. Diversifying your portfolio is crucial. It means spreading your investments across different companies, industries, and asset classes. This helps mitigate risk and protect your investments from the inevitable ups and downs of the market. And finally, don't panic during market dips. The stock market is like a roller coaster. There will be ups and downs. It's completely normal for the market to experience corrections or even crashes. But remember, these dips are often temporary. Instead of panicking and selling your investments at a loss, try to view these dips as buying opportunities. Remember, investing is a journey, not a race. There will be bumps along the way, but by avoiding these common mistakes, you'll be well on your way to building a solid financial future. Alright, you've done your research, chosen a company you believe in, and you're ready to take the plunge and buy your first stock. This is the exciting part. But first, you'll need to open a brokerage account. Think of this like your gateway to the stock market. There are tons of great brokerage accounts out there, many of which offer commission-free trading, meaning you don't have to pay fees every time you buy or sell a stock. Some popular options include Fidelity, Schwab, and TD Ameritrade. They're like the Amazons of investing. Once you've chosen a brokerage and opened your account, which is usually a quick and easy process, you'll need to fund it. Think of it like loading money onto your brokerage account debit card. You can easily transfer money from your bank account to your brokerage account, usually within a day or two. Now the moment you've been waiting for, searching for your chosen stock. Simply type the company's name or stock symbol into the search bar, and voila! You'll see the current stock price, trading volume, and other important information. Click on the trade or buy button, and you'll be prompted to enter the number of shares you want to purchase. You can buy fractional shares too, which means you can own a portion of a share if you don't have enough money to buy a whole one. Once you've entered the number of shares and reviewed the order details, it's time to hit that confirm button. Congratulations, you're officially a stock owner. You've just taken your first step towards building wealth and securing your financial future. Remember, investing is a journey, not a destination. It's not about getting rich quick schemes or trying to time the market perfectly. It's about making informed decisions, staying consistent with your investments, and letting the power of compounding work its magic over time. Congrats, you're now officially an investor. Remember, investing isn't about getting rich overnight, it's about building wealth over time. So pick smart, stay consistent, and keep learning.